All right, we're back for the next episode of The Breakdown. So today, we're gonna tackle a big topic. We're gonna be breaking down mortgages. Now, I could probably spend hours talking about mortgages, but for the nature of the breakdown, I'm gonna try to keep this brief and as informative as possible. All right, so let's get started. Today, we're gonna be going over some terms you should know, who's involved, how it all works, and how everyone gets paid. So the first word that you're gonna be hearing a lot throughout this process is lender. A lender is a financial institution or bank that will be giving you your home loan. They're gonna set the terms of your loan, like the rate and repayment schedule. So the next term that you're gonna be hearing a lot is mortgage broker. Now, a mortgage broker pretty much acts as an intermediary between you and the financial institution or lender. This mortgage broker could either be tied directly to one lender, or they can be an independent company that works with a ton of different banks to get you the best deal possible. So one of the biggest concerns that you're gonna have when getting a mortgage is the down payment. And there's this old school myth out there that you have to have 20% down in order to purchase a home, and that is just simply not the case. There are mortgages now that you can get with as little as 3% down, and in fact, the average across the US is 7% down. One thing to make note of if you are gonna put less than 20% down is that you will have to pay what's called private mortgage insurance. And this is usually a nominal fee, could be anywhere from $50, $60 all the way up to $200, $250 a month. One of the other big things that my clients worry about when getting a mortgage is the effect on their credit score. So when you're getting a pre-approval, it should really only affect your credit a few points. But the nice thing about it is that you get a 45-day period where you can then go to other banks and get other pre-approvals, and it will have no effect to your credit whatsoever. So I know what you're thinking. David, what are my options? What are the different types of mortgages that I could possibly get? And today we're gonna go over 3 of the main ones. It's gonna be FHA, conventional, or jumbo. FHA loans are going to be the easiest loans to qualify for. They have lower requirements in terms of credit score and income, and you can put as little as 3.5% down. The downsides are going to be that you have a few less options in terms of mortgage products, and you're going to have to do some extra inspections and appraisals when buying a home or condo. Next up on the list are conventional loans. These are going to be the most common type of loan, and you can get them for as little as 5% down, and in some cases even as low as 3% down. However, conventional loans have a limit on the amount that you can finance. Anything over $647,000 is going to be considered a jumbo loan. Now, jumbo loans are going to be the hardest to qualify for. They have the strictest requirements in terms of income and credit, and you're going to have to put a larger down payment. So now, within those types of loans, there's gonna be 2 main subgroups, fixed rate and adjustable rate. And they mean pretty much exactly what they sound like. With a fixed rate mortgage, you're gonna have a fixed interest rate throughout the life of that loan. Usually with adjustable rate mortgages, they're gonna have a period where they have a fixed loan. So let's just say, for example, a 7-year ARM is gonna be fixed for the first 7 years, and then after that, it can go up or down based on what the market demands. All right, so now the hot topic. How does a mortgage broker get paid? So they're gonna get paid in 2 different ways. A mortgage broker, one, gets something called an origination fee. This is also something to watch out for because every mortgage broker is gonna charge you a little bit different of an origination fee, and you don't want it to be insanely high. The next way they get paid is a commission. So they'll get roughly 1% of the loan amount, and that'll be paid to them either by the borrower or the lender at closing. So you're probably thinking, all right, great. I know a little bit about mortgages, but where do I find a good mortgage broker? Well, first of all, you should ask your trusted real estate broker, me. So you might have heard of this term called paying for points or buying down with points. So basically what the idea of this is you pay a lump sum of money up front in order to get a lower interest rate over the term of your loan. Sometimes this could be a good move if you plan on living in that home for a long period of time, but if you're not gonna be there longer than 7-8 years, depending on the deal, it probably doesn't make sense to buy points. Obviously, everything is situational. Just make sure that you have a good broker that will talk through your specific situation and give you the best advice. Here are a couple tips to keep in mind when you start the process of buying a home and when you're first getting a mortgage. Start getting documents in order early on so that when your lender asks you for income statements and tax returns, that you have those on hand ready for him to expedite the process. So here's another tip. Your number one resource throughout this whole process should be your realtor. They should be able to put you in touch with a really good broker that can talk you through your situation and give you honest advice. If your realtor isn't providing that to you, maybe you should get a new one.